I spoke about investments, investment products, how to access what is a portfolio, how should you design your portfolio. But before you do all of these things, you should start with covering for your emergencies. I'll tell you why this part is very, very important. Let's say let's say I was investing into stocks. I was big on crypto. I've done everything. I was very, very disciplined when it comes to investing. I listened to someone who told that 40% of your money should go into investing. I've been doing that for the past 5 to 6 years. Suddenly COVID happened, and all of a sudden I lost my job. I lost my only means of making money, and I panicked. I'm in panic mode now. What are some things I will do? I'll straightforward go to my mutual fund, redeem it, sell the stocks that I have. Again, markets are crashing during COVID, so you're possibly making losses on the stocks that you have invested in. So you just killed your wealth growth plan, right? It's gone to shatters. So to avoid such situations, that can be one trigger. The other trigger can be you being in a very bad mental phase, right? You just don't feel like working anymore for about 2 to 3 months. So that could be one. The third part can be health. Maybe your health gave up. Maybe you have a condition and you need to be operated, and you will not be able to work for 3 to 4 months. This is why it is very important you guys cover for one, your health. How do you get a cover? Health insurance. Again, I know the process of getting a health insurance is super duper confusing. And there is this beautiful platform called Join Dito. Not Policy Bazaar, not those platforms. They take a lot of commission. Join Dito is a platform by Zerodha. You can book a call, and they do not flood you with option. They listen to what you want. They listen to what type of a profile to have, and then invest, give you a ideal health plan. So Join Dito is a platform. Again, for term insurance is not something everyone needs. Term insurance is for people only if you have dependents on you. Let's say mama, papa are dependent on you, or someone in your family is dependent on you. Your spouse is dependent on you. Then you need a term insurance, which means something, God forbid, something bad happens to you. Then they'll get a cover in that event. So again, there people fool you with the things like ULIPs. Do not buy this. Please don't buy this. It is a terrible plan. Buy term plans. Okay, not ULIP, term plans. Term plans are like 50 to 1 lakh crore should be enough. Again, it is only and only if you have dependents, otherwise not required. Third, covering for, I told you, it could be COVID, it could be an event like COVID, or it could be you being in a bad mental phase, you not being able to work, you just don't want to work, you want to travel the world for 3 to 4 months, and you've taken a break from your freelancing or job. So it is called as an emergency fund. All these situations are an emergency. So what you need to do is 6 to 12 months ka least minimum expense should be saved up, and it should be saved in an emergency fund or not a fixed deposit. You can keep it in debt fund. 6 to 12 months ka least minimum expense. Once you have your health, emergency, and term sorted, then you can start thinking about investments. And one more important point, if you have loans hanging on your head, please clear that out for God's sake, because I know banks will tell you, "Aram se de do, time hai, 14 years hai." They would want to pay your loans till you're 30 years old. Why? Because they get the maximum amount of interest that way. Don't go with the repayment plan your bank gives you. As soon as you have extra cash, go pay that loan. Pay extra. Pay more than the EMI. If your EMI is 7,000, let your goal be to pay double that, 14,000, 20,000. My education loan, according to my bank, I should have been paying it till now, abhi tak, but I cleared it within 1 year, because it's a simple fund of math, right? Your education loan will cost you 14%. You're investing into certain terms with the hope that you'll beat inflation, but you're also paying extra interest to your bank. How does it all make sense? Doesn't it make sense for you to first clear that loan and then invest into these attributes? So think about it. Always clear your education loan, cover for your emergencies, educate yourself about mutual fund stocks, get started with that from year 2. That was about covering for emergencies. Now, Jockey has been something that has been there since forever, right? And the stock price has increased from, I don't know, I need to check. Do you want me to let us check?
It's around 30K, like it was 2009 it got listed.
Exactly. It looks red now, but that's why don't look into the short-term thing. Let's go to the max chart. It was 430 bucks when in 2007. In 14 years, it has reached 31,000. I'm not going to do the math because it's gonna sound crazy, but yeah, these are some things that you have to do. You have to zoom things out and see from a long-term perspective. In the short term, even 5 years upar niche tha, right? So if you entered at 2008, you wouldn't be making much of a profit. But if you see long term, and if you run an SIP, what would happen is you would buy Jockey at this point, you would buy Jockey at this point, this point, this point, this point, this point, because you're buying every month through SIP or mutual fund. So you're getting a very good average. So let me tell you an interesting thing. What will happen is as soon as Jockey starts going above this, you're on profit because your average price is at this, right? You're bought at all these levels. So your average price would be around 22,000. So that is the power of SIP. That is the power of staying invested for a very, very long time. Always stocks ke liye minimum 7 to 10 years should be the time horizon for investments. And price appreciation is just one aspect. There are many other aspects. You know what happens? I'm pretty sure you have heard two stories like someone who's invested 1 lakh in Infosys has 100 crores now. You might think it is clickbait. It is not. It is 100% true. If that someone invested into Infosys 30 years back, that person legit has 100 crores. Why? One, the stock price has increased. Two, what happens is bonuses, you get bonuses. The stock split. What happens is if you have 100 stocks, if it splits in the ratio 1:2, you get 100 extra. Sometimes they give bonuses, they give dividends. When companies make profits, they distribute a part of their profits to their shareholders. Why? Because you are a part of the company now. Even if you buy one stock of a company, you become a part of the company. You might not work for Infosys, but you're a shareholder of Infosys. So if you think from this perspective, it's very nice to invest into stocks because you're indirectly at the same time. There are cases that is exactly where education comes into picture, right? Good point. I showed you Page Industries ka graph, which is beautiful, great profits, but
let's see Vodafone, Yes Bank.
There are examples like Yes Bank, complete ulta. It was at 370, now it is at 13 rupees. So now you guys will be like, Anish, your theory just went out of the window. But one, choose wisely, yes, but never ignore the red flags. Yes Bank ke baare mein, there were news stories coming out about the inappropriate things the promoter was doing, how he was doing the business. From the past 2 years, this was in the news, but you're still hopeful that kuch aayega, RBI aayega, it will rescue the bank. Don't be hopeful, be completely unemotional when it comes to your stocks. If there is something shady happening in the stocks, you have to exit it. So on that note, guys, I hope this was useful. And yeah, I'm done, Aditi. That's it.